Hello guys, it's Max here from Daily Market Movements, and just before I start today's video, I just want to make you all aware of the trading signal service that we provide here. If you'd like to receive trading signals from me, myself, or the rest of the team here at Daily Market Movements, then you can do so simply by visiting our website at www.dailymarketmovements.com. What I'm going to do is leave the website link below this video in the description, so if you are interested in joining our amazing team, all you have to do is simply scroll down now, click on that link, which will then take you to our website, and then that's where you'll see that we charge a very small fee of $249 for our signal service, and that's for a year's subscription. So it really is great value for money. However, in front of me is the crude oil futures chart, and as you can see today, we're trading in the green. We rallied during the European session, but then when the US markets opened, we had the stock market which pulled back around about 0.5%. That was the Nasdaq, the Dow, and the S&P 500, and I think it's just simply brought crude oil along with it. But you know, today we're trading in the green, right? So it's not a bad day. We did tap $38. However, we have now retreated ever so slightly, and that's why we're now trading at $37.58. Crude oil, though, long-term and short-term. Long-term, I'm not quite sure. Short-term, though, however, I am bearish. I think we go down to $34 to $35. And then for the longer-term outlook, it just depends what crude oil really does there. That's if we get there, of course. But the fundamentals just aren't looking good for crude oil. Flu season is fast approaching, and the COVID cases numbers are expected to increase rapidly, and that could really damage the demand for oil around the world, and especially in the US, which has struggled a lot with COVID. You know, it's the worst affected country in the world, and if case numbers go back up to anywhere where they were back in March, then the demand in oil could see a massive negative effect. So short term, I'm not looking to buy this. Any rally is to be shorted. The reason I'm targeting $34 a barrel is because it's the bottom of this gap that we formed back in March. So I'm gonna sell it down to there, and then there could be a potential buying opportunity down at $34, but we'll have to wait and see until we get there. RSI was considered to be overbought, and I think that's why we've seen a slight not rally, but you know, we've kind of paused our down trading, and now we've kind of just stuck around that $38 to $37 a barrel price, and I think that's just because the RSI is just basically regaining some territory before we then start our next leg back towards the downside. So as I mentioned before, bearish short term, I'm trading down to $34 a barrel. No interest in buying at this moment in time unless we get a close above the 50-day.